customer should have necessarily got a PAN card, Aadhaar card today people have. The checklist is that your company where you work, you should verify that which institution will fund. If your company is, let's say, private limited company, and the company is in that sense is very small, having a turnover of, let's say, very small turnover of 10-20 crores, then you should figure out that which institution will lend that, because some companies do, multinational companies, large companies and employees of that, some companies don't do. So you should figure out an institution. You should figure out your own standing through bureau. You can these days you can directly access your bureau. You should know your bureau score. If you have PAN card, you can get that. You should have your bank statement of 3 to 6 months, and there must be a clean track record of the individual. And if there is any history of some sort of delayed payment or some dispute somewhere with bank or non-bank or somewhere, so there should be a justification of that. Otherwise, application can get rejected, and it will be difficult for an individual buyer to justify or even know the reason in detail. So basically, financial literacy is required along with KYC, along with bank statement, and along with the knowledge that the company you work for, you be ready to express that sort of desire versus understand which companies, which banks will do my case or not. So that requires little more, I would say, awareness. Whenever customers approach a developer in general gets the project approved from many banks. So it can be a project approved from SBI, it can be a project approved from HDFC, it can be project approved from other banks or other housing finance companies. It can be a project approved by Godrej Finance also. Godrej Housing Finance also does approval of developers, and that is called APF, approved project funding. So first thing developers should tell the customer, or customer should ask from developers, is that which company or which bank or which institution has approved the project. Now, at an individual customer level, customer cannot go and verify all those documentation. But when customer gets to know that this particular project where customer is buying property is approved by leading banks and non-banks, 99.99% there is no issue in the project. So customers can go ahead. So they should check for APF approval of those projects by the leading institutions, at least. Customers need to do an agreement. In Maharashtra, for example, the registration agreement happens upfront. So customers need to first select the property. Once the property is selected and once the transaction gets processed, then there is something called payment proof. So if a customer has bought property and given token check, the payment done as OCR, own contribution receipt, we call that. So if the customer has made payment, that payment should be documented. The payment is the first thing from where home loan starts, right? The second thing which customers should do is that a cost sheet submission of the property, that the respective property is going to be completed in next 5 years. What is the payment plan? So customer does that payment token check to a developer that clearly says that I'm buying this unit. That unit will have a cost sheet. The cost sheet further converts into 10% down payment of the property. In general, it can be 5% also, depending upon developer to developer. So that own contribution made, agreement registered, and then there is further responsibility of financial institution to pay all those tranches or due of a developer. It is also mutually agreed between developer, banker and customer via a third party agreement in some locations, via a registered agreement in some locations like Mumbai, Pune, that this is the payment schedule. 99% of the cases, 5% payment by the customer is to be done at the time of a property possession date. So then customer needs to pay overall 20 to 25% his own contribution or her own contribution. That 25% contribution happens over a period of some time, starts from 10%. The remaining 75% or 80% or 90%, depending upon customer segmentation and customer's loan bracket, gets paid by the lending institution.
Please like and share this video and do subscribe to MBTV.